Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Taiwan index managing to hold on to gains of 0.8%.
I think the Solicitor General made a very powerful case for the need for the president to have the IEPA powers.
Bihar is voting after the SIR has happened.
Unlike the Nifty bank on Tuesday did not make a fresh low, so there is a bit of a positive divergence as far as the banks are concerned.
I think we should be able to get the double-digit growth for the full financial year.
M&M is likely sold its entire stake and the block deal is done.
83,600 plus on the sensex and 25,630 on the Nifty. So it's kind of flattish, slightly positive bias.
The growth rate of the industry will get normalized to a large extent.
The SUV on the PV side, as you call it, we would expect to have seen mid to high teens growth.
When it comes to chemicals, it's not the US. The big daddy in the room is China.
We expect the innovative business to grow in a healthy mid-teens as we go along.
Hindalco got knocked back in today's trading session as its arm Nobilis posted a mixed quarterly set of numbers.
Barrage of earnings that we are tending to today, but the mid caps under a lot of pressure, 400 points down.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi, and Nigel is also there with us in the newsroom. A bit of a quiet and sluggish kind of a trading session. Markets have now been down for four out of the last 5 trading sessions. The bigger cut is seen in the mid-cap index, and that's down nearly about 500 points. But the story is about individual movers reacting to numbers, and there have been so many of those.
No, absolutely. And it's a bit of a disappointing session, you'd have to say that, Reema, because we're not only underperforming global markets, the Nifty is very well split between the gainers and the losers. So despite a couple of IT stocks doing well, despite something like Reliance doing very, very well today, you're still getting this kind of a sluggish movement on the way down. And the culprits actually are some of the big stocks on the other side. Hindalco has been a casualty right from the morning, and that hasn't changed. Grasim has been down from the word go, and this is no buy on dips. In fact, Grasim, the pressure has only increased as the day has progressed. So these two stocks have been, a bit disappointing. And again, the Bank Nifty, if you were expecting any kind of support coming in from there, well, it has flattered to sort of deceive, not too much, been down about 0.3% throughout. But like you're saying, the bigger issue is in the broader market, because there we are seeing some pretty severe result reactions, wherever numbers have missed the mark.
Well, let's quickly run through some of them. For instance, Delivery, Aditya Birla Fashion, Blue Star, which has cut the revenue guidance. That's reacting adversely. Ola Electric is another one. But on the flip side, you've got quite a few winners as well. That's the performance there. You have Ola Electric down close to about 4%. On the positive side, you've got a Paytm, you've got an Indigo. Reddington has been strong since morning, and the company, when we chatted with them today, held on to their margin guidance. So 2.3 to 2.5% ex of their Turkey business arena. So holding on to guidance. Nuvama has been a big star in today's trade.
Yeah, absolutely. Nuvama is doing their bonus issue as well, so that kind of helps sentiment. And let's not forget the other big story of the day, obviously, has been excitement in the paints arena. Is the green color coming back to the paint market? The resignation of the top executive at Birla Opus has suddenly got the market excited. And we got confirmation because he spoke to the management of Berger Paints, and they indeed asserted that, yes, now Birla should actually stabilize at a run rate of about 900 to 1,000 crores per quarter. And they don't expect that kind of, huge intensity in terms of discounting, dealer discounts, etc. All of that should come down. So reduce competitive intensity, which is why you're seeing something like Asian Paints do so well in today's trading action. Well, let's see if we can go across to Nigel now. Nigel, what do you make of things?
Well, that's right. In the mornings will be when we were chatting, we had spotted out 2 stocks, right? Both of them from the Nifty itself. We spoke about Hindalco. The markets will not pardon. Capex going up by 2 times in around 3 years on the same project. And the other one we said was about the paint sector, and I think both of them are in focus. Grasim down, and Asian Paints, that one's bucking the trend. Remember, the stock is down 20% from the time that Grasim launched Birla Opus. in February 2024. And, valuations as well had corrected. But as Nomura pointed out in their note, they believe better times to come. Problem is that the markets appear to be a bit of a sell on rise today. And that's why we're still down. Breadth of the market is not, that's telling you the picture actually, not the headline index. 3 stocks declining for 1 stock that's advancing, guys.
Okay, all right, got that. So with that, let's quickly tell our viewers what's lined up over the next hour or so. It's a packed lineup as always. We're putting the spotlight on OMCs. They have come in for some selling pressure today. This is despite Morgan Stanley actually sounding quite optimistic. Morgan Stanley's revised targets higher for most of these OMC players. We'll get you more analysis with Sonal in just a bit. And then we have PB Fintech, Policy Bazaar in focus as well. Stock's been under a lot of pressure. Sources are telling CNBC-TV18 that insurance operators have cut commissions to Policy Bazaar by as much as 18%. So what's behind all this? We'll be back with that big story in just a minute. And then, of course, paints. That is a big discussion point like we just discussed. And there's a fair amount of green on some of these paint stocks. Is it going to last? What's the way forward? We'll discuss this with our guests as well. But before we get down to all this, and then, of course, the stocks that are reacting to numbers, Paytm on the upside, Delivery and NetWeb on the downside. More specifics on some of these counters coming up with our team in a bit from now. Let's get started, however, with Mitesh, as always, with some closing ideas. Mitesh, it's been a very sluggish day at the index level, no headway. What are you doing in the last hour now?
Yeah. Good afternoon, Suri. One, I think, very clearly, paints, you were just talking about that. I've got Asian Paints as a buy. Of course, there's a fundamental news over there. Also is the fact that last time the stock had failed to get past this 2580, 2590 zone. And today it's done that. Though it's marginally up, I think, but the overall setup, given the fact that it opened with a gap and then sustaining, is a positive sign. So I would take Asian Paints as a long with a stop just below levels of 2578 for targets of 2655. The stock on the sell side is T-Tower Wagons with a stop at 875, sell for targets in the range of 820 to about 815.
Okay, let's talk about oil marketing companies. They are in focus on the back of multiple brokerage notes. Sonal joins in with more. Sonal.
Bullish notes coming in from brokerages on oil marketing companies. Let me start with Morgan Stanley. They have an overweight rating on the stocks. All three of them have increased the target price on all three names substantially from the current levels. That number will come up for you on the screen. Now, why are they so bullish on these names? They say fuel retailers' free cash flow will be as large as third of their market cap over the 3 years cumulatively after the $20 billion of investments come on stream by FY27. Half of this free cash flow that will be distributed, and the 20% return on equity and 10% dollar earnings CAGR of over the 3 years will make these stocks very attractive for shareholders. They prefer HPCL over IOCL and BPCL as well. $65 to $70 per barrel. The crude levels is a sweet spot for OMCs, but we've seen in the past that crude price movement hasn't impacted them so much on a daily basis. Reduced intake of Russian crude has limited earnings impact for Indian refiners. They do not think it will be a big impact, and they will continue their growth CAGR going forward as well. Even Goldman Sachs has increased OMC's EBITDA by 3 to 9% for the next 2 fiscal and 12 months target prices by 9% on an average. They estimate there's still a 5 rupee buffer in the marketing segment to cut prices before the margins can drop to normalized levels. They have high levels of spreads around 11 to 12 rupees on gasoline and diesel. They reiterate their buy rating on HPCL and BPCL, where they think the current valuation have good risk reward for stakeholders, and LPG losses have narrowed over the past few years, so that will also bode well for their marketing segment. That's why Goldman Sachs is also very bullish on these names.
Thank you, Sonal, for explaining that so well. Ramesh Kant, head of research at Chola Securities, is also with us. Ramesh, stocks of oil marketing companies have been moving up in anticipation. The numbers were good and anticipation of better prospects. Now brokerages are turning bullish. Where do you all stand on oil marketing companies, and is it attractive at this juncture?
Yeah, good afternoon, Rima. There was a trade and it has played out. Maybe a last leg of the rally is still pending out there. If you look at oil marketing companies, Q2 numbers were good because most of these companies had in Q2 have imported Russian oil. So there's that leverage was there. The window was there to get into play, and that has played out. Plus GRMs, I think, has topped out. Q3 and Q4, the GRMs will see a slight decline rather than where they are as of now. For each one of them, they have a different set of GRMs playing out. Thorough is definitely under pressure. So if you're looking at a long-term 3 years, 5 years, 6 years kind of a span, then I don't think the thorough which they are enjoying right now is likely to be there. It's a deceleration kind of environment out there. So having said all this, it's not a structural growth story into play or a wealth creator kind of a place. Trading plays where there, I think maybe 5-7 percentage point still you may get, but that should be the end of it. So we are not, invested into OMCs from an investment perspective.
Absolutely. And we'll sort of come back with more in just a bit, but not invested in OMCs. Stocks have done well. Today, of course, there's a bit of a pullback after the 15-20% moves over the last little over 1 month since the oil minister was here in Mumbai speaking with investors. Well, the other big story, right, is PB Fintech. Now, Yash, my colleague, is picking up that there are commission cuts afoot for Policy Bazaar. This is on the back of the GST changes, GST cuts which had happened. We reported this about an hour and a half back. Stock is down 3.6. It had fallen almost 5.5% Yash is here. Yash, take it away.
So after a couple of weeks of discussions within the general and the health insurance industry, all general and health insurance companies have unanimously decided that they will reduce commissions or cut commissions which they pay to Policy Bazaar on sale of health insurance policies by an entire 18%. What we've been given to understand is that, health as well as general insurance companies have taken this decision, to support the deteriorating loss ratios. They don't want the loss ratios in the health segment to increase, for which it became very important for all the companies to pass on the entire 18% cut in commission to Policy Bazaar. This cut of 18% in commission was already done to other distributors like banks and agents, and now it has been decided that the same cut of 18% will be done to Policy Bazaar as well for the sale of health insurance policies. As far as this cut of 18% on health insurance commissions is concerned, it is expected to become effective starting December 1. It is important because health as a segment is a large segment and a profitable segment for Policy Bazaar. It contributes 20% to the revenue as well as 60% to the value as far as Policy Bazaar itself is concerned. And that's not it. What also we've been given to understand is that life insurance companies are also discussing, the discussions are still underway in terms of how much cut do they want to pass on as far as sale of life insurance policies is concerned. So that decision from all the life insurance companies in terms of commission cuts coming from there also still remains to be an overhang as far as life insurance business of Policy Bazaar is concerned.
Okay, all right, got that. Yash, thanks very much. So PB Fintech still slightly lower today. And if you look at it, the stock has actually been sideways for the better part of this year. It hasn't done too much. Very, very range bound between, say, 1,600 on the lower side to about 1,800 on the upper side. Dharmesh, quickly, PB Fintech and, if indeed the commissions are lowered by this amount on an ongoing basis, then what?
Yeah, so too much volatility out there and too much push and pull happening around regarding the commissions, how much should go and how much should be, borne by the distributors like PB Fintech of the insurance policies. So I think it's better to avoid it, not to forget the valuation multiple they are sitting in. So they were just, so wafer thin kind of a margin business. So volumes are the only key player out there. And if some chunk goes away, so it's a difficult time. So my advice would be just to stay away from the stock. Let the thing settle down and then calculated, again, investment bet can be taken.
Okay. All right. Got that. The other stock to focus on, actually, which came out with an interesting set of numbers, is UPL. The quarter has been looking good. UPL posted a profit of over 550 crores versus a huge loss, 400 crore rupee plus loss same time last year. Their margins are looking good at 18.3, and they've actually increased their EBITDA guidance as well. They expect growth of 12 to 16% now versus 10 to 14% earlier. Now, again, Dharmesh, on UPL, the stock's reacting quite well. The question is sustainability. When we've had these flash-in-the-pan kind of quarters even earlier, which seem to indicate the worst is behind for chemical companies. But is it? Your thoughts?
Going by last 2 quarters number, most of the specialty chemical companies, specifically did well. Even agrochemicals did well. But again, the caveat is always out. You never know when these companies are going to stabilize, and things in the European market has still not normalized to that extent. If you look at soda, as the volume of take was very low, the prices have been falling, and all these chemical molecule plays is always a dicey game. As long as managements are not sounding very confident about the future growth trajectory, it's very difficult to take a call. And none of the management, to my mind, were very super gung ho or confident about the chemical plays. Specialty and CDMO, yes, there has been a good commentaries coming around, and the plays numbers have also been encouraging.
Okay, stay with us. I want to address Asian paints as well in just a bit, 5% higher. But the finance minister is speaking at the SBI, State Bank of India conclave. CNBC-TV18, of course, is partners. Listen in.
Themselves going through a disruptive phase. But where we are talking about resilient interdependence, we are also sure that we keep that integrating with global value chains alive. So it envisions an India that designs, produces, and innovates for itself and for the world. So an economy which will be rooted in self-confidence, powered by enterprise, and also guided by compassion. So it is the coming together of these things, the economic strength, the technological capability, and also the social empowerment and environmental responsibility, all aligned with the larger goal of Vikasit Bharat 2047. But I see 5 broad dimensions of Atmanirbhar Bharat. So it's a expansive kind of a landscape that we imagine when we're talking about Atmanirbhar Bharat. But 5 milestones or 5 pegs can be placed so that it is laid on strong footing. Economic self-reliance is the first I would place. So you need to have Atmanirbharta in your economic affairs. Social self-reliance, Samajik Atmanirbharta. Technological self-reliance, strategic self-reliance, and finally, environmental, but yet mix of energy, sufficiency, and so on. So environment, not just in the cause of green, but also self-sufficiency in those very critical essentials for growth. So it will be on these 5 pillars that I would be placing my narrative to say what is it that we are thinking in terms of when we are talking of Atmanirbhar Bharat and also reaching Vikasit Bharat by 2047, giving a picture under each of what work has already happened. The call for 2047 Vikasit Bharat may have been just a few years old, but the work towards achieving Vikasit Bharat through an Atmanirbhar route had commenced even from 2014. So even as I lay these 5 pillars before you and talk about Atmanirbharta in those areas, I'll equally place before you what foundational work has happened in order that what we need to do for the next 20 years is going to be built on those foundational work. So when I talk of economic Atmanirbharta, it means the nation's ability to generate its own prosperity. And that too through diversified production, internal value chains and value chain creations, and sustainable wealth creation. So India is a vast and uniquely diverse nation. There is no single model before us for us to copy or to replicate. And therefore, what we are going to do is essentially build on those lived-in experiences and also the models which will be adaptable for India's own futuristic growth. So it should be shaped by our own realities. And when I therefore say of economic Atmanirbharta, it will definitely mean food security, It'll definitely mean energy security, which will also be a part of what I'm finally talking on, environment-related issues. Giving full steam and full energy for MSMEs, because they contribute more than 40% of our economic export. Also the contribution to GDP through various sectors in which MSMEs are present. And also the labor-intensive and traditional strength-carrying textiles, and unique for India, underwhelming exploitation which has happened, the area which gives immense potential for employment, and an area which should have been naturally our strength, tourism. So I will look at these broad-based progress in these areas, achieving across these sectors, and here blending traditional sectors, modern technology, and innovation-based work. So there is definitely too many variables coming into this calculation for economic Atmanirbharta, but that's the beauty of it, and that's where the Samajik Atmanirbharta, which is also one of the pillars about which I will talk, have a overlap. So in all this, and since it's a gathering of SBI's invited guests, the first thing I would emphasize on is financial inclusion. The more number of people who are brought to the formal financial inclusion process, and the more number of people who are going to benefit in their economic activity through banking extensions, the economy is going to be that much more robust. So for that, we need a robust banking and financial ecosystem. That will be my second emphasis. And the third, above all, which exclusively comes to the state government's domain and the central government's domain, is fiscal prudence. So economic Atmanirbharta will be achieved only when we keep all these factors in our mind. So what efforts have gone? Since I started by saying from 2014 itself, there have been a lot of attempts to do the foundational work for the achievement of Vikasit Bharat. You might have heard these statistics before, but I'm just giving you the nuggets. It tells you where consistency in policy, stability in governance, and pursuing every particular money that is going down to the last post, welfare or infrastructure creating, you are looking at taking the money allocated in the budget to the last point. So infrastructure creation has been our major focus in order that our self-reliance really stands on proper footing. So your economic self-reliance is not going to be realizable without adequate and also proper infrastructure. So look at what has happened in the last decade. The capital expenditure allocation has increased nearly 5 times, where it was closer to 2013-14. It was actually at 2.30 lakh crores. And where is it today? 11.21 lakh crores. So that is the proverbial putting the money where the mouth is. We've actually shown it in the last 10 years. And I closely monitor how much actually gets spent much before my RE numbers are fixed. So it is with that seriousness that allocation is followed till the last post where it has to reach. So national highways therefore grew by 60%, and where it was 11.6 kilometers per day in 2014, it has reached 34 kilometers per day in laying of these national highways. So is the metro rail connectivity. 23 cities in India now have metro. Some of them complete and up and running, a few where the work is still on. So from about 250 kilometers, which was in 2014, today India has 1,000 kilometers of metro lines in operation. So if you look at then port capacity, It doubled to 2,762 MMTPAs. Overall vessel turnaround time, which is very important in terms of trade facilitation, has improved from 93 hours to 49 hours now. So we have undertaken countless path-breaking ease of doing business reforms since 2014. I don't need to remind this August gathering that 1,500 archaic laws have been removed, 45,000 compliances have also been removed. The goods and services tax reforms, new generation GST, is something about which we've spoken severally in the last couple of weeks, essentially focusing on rate reduction, you would think, but I would think rate reduction, yes, but process simplification, classification clarity are also part of this GST next generation reforms.
Okay, welcome back. Lots of movers. Actually, today, lots of movers on the downside today, right? I mean, Hormuz is here with basically the top, stocks which are moving in volumes, etc. I mean, the entire stack. Hormuz, over to you.
On days like this, when you are spoiled for choice, when you're trying to make a list of 3 or 4 stocks, when there are 30 or 40 that are moving around, you've been in a bit of a dilemma. So we'll start off with one that is bucking the trend, if you would call it that. Redington is that stock, 17% higher now. It snapped a 4-day losing streak today. And you may wonder if this 17% up move is coming after the stock had gained only 4 times in the last 4 weeks. So big up move seen in Redington today after its results. The volumes are the highest in over a month. We've had almost 7 crore shares that have been traded on Redington today. The 20-day average is only 30 lakh shares. And as a result of today's move, the stock has moved above all of its key moving averages, has had a fairly decent year so far, is up 45% year to date, courtesy of today's gains as well. On the downside today, among the top losers is delivery, and the biggest single day fall since May last year. Today's volumes have already crossed Tuesday's volumes, and delivery is the best example of so close yet so far. The stock had tested its IPO price of 487 on Tuesday, and yet again it has failed to sustain those levels has delivery. And today we have had close to 2 crore shares that have traded, and the 20-day average here too is only 30 lakh shares, and the stock is now nearing its 100-day moving average, which is a very important level at 443. It's just within touching distance of that, and on the upside it's broken below its 50-day moving average, which is at 467. And lastly, the other top mover on the upside today is CCL Products. Another 4th straight day of gains for the stock, the biggest single day gain since May. We've had almost 1 crore shares that have traded today on the stock. The 20-day average is just over 70,000 shares. It shows the kind of volumes on which the stocks have moved, both on the upside and on the downside as well. The stock has done fairly well, positive annual returns for the last 5 years now, and since the start of 2021, the stock is up almost 4x in value.
Thank you very much for that. There's one more stock, even IGI. This is a company, again, which is up close to about 9.5%. Revenues have seen a pickup. Revenues in the current quarter were 21%, which compares with 15-16% the quarter prior. And the quarter before that, it was a top-line growth of about 6%. So the street was worried about the surge in lab-grown diamonds hurting the rating business of IGI. But this quarter, they've done well, 21% top line, 18% at the bottom line. Aman Chauhan, fund manager at Abacus Asset Manager, is now with us on the show. Aman, overall, what's the read on the earnings season so far? Have you all done the number crunching? Where have the beats versus the misses, and how have you changed your portfolio in accordance to that?
The beats, predominantly it was the metal sector that has done well. Some of the consumer names have done well. Cement, as expected, on a low base has done well. So these are some of the sectors that have done well so far in the result season. We have increased our metals exposure in that way. Cement is where it is. We have trimmed some of the IT exposure that we had because the growth rates there is slowing down. And that's been the key changes in the last month or so.
All right. Hi, Aman. Good afternoon. Good to see you in. Aman, I wanted to ask you about the paint sector. It's been the sector not to look at because you had a large, corporate that's coming in there and challenging the incumbents. They've corrected, 15, 25% in the last 18 months or so. Suddenly you're seeing Asian Paints fighting back, Berger Paints as well as fighting back. And now the hope is that maybe the color of the paint changes for the incumbents because the challenge that's coming from the new player has more or less played out. Your view?
I think for that to happen, the stocks to do well, the volume has to pick up. So once the industry level volume picks up, both the challenger as well as the defender will see volume growth. And that is when I believe the investor interest will come in. Today, it's not just the challenger, which is impacting the margin. It is also that the volume growth is pretty subdued. So in spite of a decent, you can say, consumer uptake, the volume growth in the paint industry has been low single digit kind of numbers, right? So we are all hoping for that number to come in. So hopefully, monsoon has been good, though it is pretty elongated as of now. If the current season or the next season volumes pick up, and even if they reach high single digit or say low double digit, that is the time I think the paint sector will get re-rated, both the incumbent as well as the you can say challenger.
There's only one.
Aman, you mentioned about metals, and you all have normally been the niche players. Sarda entry is something I can see. And you all have done quite well on that one. I don't know whether this is a re-entry because I recall you all had it earlier as well. Jindal Stainless was something that you liked, and Imfa as well. If you could just tell us what you like from the metals pack.
We like both the ferrous as well as non-ferrous. Within the steel, the preference is on stainless steel versus carbon steel because it's more B2C and better margins as well as better pricing power there. we are also like the other metal companies, which is mainly the aluminum companies or the zinc companies or the other metals and mining companies. So as we speak, it's broad-based that we are positive on the metal space.
Hi, good to have you with us today. Aman, just to talk about some of these, chemical names, we were having this discussion just a while back as well. While the likes of SRF, for instance, are still very cautious and they're talking about the disruption that US tariffs have kind of led to the business, there are others like UPL. UPL just reported numbers a while back. They're looking pretty good. They're sounding a little more confident as well. So if you're looking at diversified chemical companies or even specialized chemical products, then are you looking at any part of it more favorably? It's also a very large sector. So maybe, narrow down maybe agrochemical versus, say, APIs. Just tell us how you're thinking about it right now.
So clearly, agrochemicals is doing well globally because it is coming off a low base, and that is what is benefiting UPL. In India, because of the monsoon being erratic, though it has been good, but it has been erratic, and hence there's a lot of sales return that has come in. It's in the industry, that's what we see. But overall demand is good. So the agrochemical sector per se is doing well. Some quarters plus or minus, depending on how the rains have been. Besides that, anybody exporting to US is facing the tariff issue. I believe investors are all waiting for the final tariff number to come in. Nobody is expecting this 50% tariff to stay for long. Hopefully this month, we get a final number, and this number is anywhere between 15-20%. I believe all the other chemical companies that are currently facing headwinds in US will also come to be in the limelight, because this sector per se is now started to do well. So Indians are gaining market share versus the Chinese. The pricing issue which the sector faced last year is now behind us. So selectively, you can definitely look at this sector. Even if they are exporting to US, I don't think that should be a worry. Yeah, just that people will wait for a month or so for the final tariff number to come in.
Aman,
it's difficult to give you a broad, in the sense, which chemical sector, because all stock specific. There are some companies that have made M&A. There are some companies where new molecules are coming in, and there are some chemical companies which, from a very high base, will still not be able to grow this year.
Aman, big IPOs. Did you all participate in Lenskart at an anchor level, or how do you feel about the valuations of Lenskart? There's Grow, which has been fully subscribed already, and PhysicsWallah opens next week. All big consumer tech companies.
As always, pretty selective on the IPOs. Out of the three names that you mentioned, we have invested only one of them. So the focus is always that if the company is decently profitable and at a value which makes sense to us, then we'll definitely look at these names. So these are new age companies. We understand they will not be trading at 10, 15 P or 20 P kind of thing, but the premium has to be reasonable. So of the names that you mentioned, one of them we have invested.
Pro, right? From your FlexiCap fund. And Lenskart, you gave it a pass.
Yeah.
Okay, got that. Thank you very much for joining in. Moving on now to what's happening in the futures and options space. Nigel is at the desk.
Well, that's right. It's a very, very interesting part of the market that we have joined in right now, because the Nifty Bank, well, it's very, very close to the 20 DMA, and it'll have to defend that mark, actually. So that's going to be the important cue. From here on, we're just 200 points away from the 20 DMA. Then on the Nifty, I was looking at the options data, and call writers have come back into play. That's why the PCR from around 0.9, it's come closer to around 0.8. And if you look at it, the 25,600 call, 25,700 call, both of them big open interest built up, and the premium is down between 40 to around 50%. However, if you had bought some puts, you've got the direction right, but you're not making any money, because the Nifty is down close to around 60, 70 points the last time I checked. And if you look at the premium out there, that as well is down by close to around 25%, which is telling you at around the 25,400 put mark, we are seeing writing, which means that the bulls don't believe that we're going to break that mark, 25,400, 25,500 odd mark. Individual stocks are in focus. Hindalco, massive shorting being seen on that counter. That stock was doing so well. It's come off the top. It's under pressure today. Big open interest build up, fresh shorts. Eternal, the stock has corrected close to around 18% now from the highs that we saw on the result day. So that stock is under big pressure and big open interest build up. So fresh shorts on that one. Britannia, though, that's come back into the buying list, and fresh buying is what we're seeing on that particular name, and a stock we don't normally talk about with regard to the futures market, but PI Industries, good buying being seen on that name as well. So Nifty at a crucial juncture right now, 25,400, 25,500. That's the mark you don't want to break. And importantly, the Nifty Bank as well, very close to the 20 DMA. Back to you guys.
Okay, thank you. Let's get into a break. On the other side, we'll get you a few BTST calls. Mitesh will be back with us.
Welcome back. So the market continues to move along, amble along, shall we say. But the mid-cap correction is the one that's actually a little concerning. And even the Nifty has broken the day's range. And it's looking at some fresh selling at this point in time. So not inspiring too much confidence given the global backdrop. All one can say is that US futures are a little cautious after the US Supreme Court hearing on tariffs. And the judges there raising big questions. There's a bit of a red around US futures. We'll have to see how the US market does tonight. But otherwise, I mean, this has been a disappointing session, one can say quite safely. Mitesh is back with us for some final thoughts. Mitesh, closing trades and then index levels as well to keep in mind.
Yeah. So index, one thing that now that we will possibly close below 25,600 is a negative, and I think 25,400, I think Nigel was also highlighting that 25,400 to about 25,380 is the next support area. So we might decline a bit more. On the stock side, I have a sell or STBT on Indian Hotels with a stop at 704 for targets of 690, 688, and a BTST on Dabur. That's closing towards the day's high. So Dabur is a BTST with a stop at about 519 for targets of 528, 529.
Got that. Let's talk about paints. That's the sector in focus. Mangalam is here to tell us why. Mangalam, there's so much. Leadership changes, numbers from Berger Paints. Fill us in.
Well, there's never a shot of color, the paint sector right now. Just when we were talking about disruption in the paint space, the incumbents having a bit of a geo moment with Birla Opus coming in. Yesterday there was a sudden surprise that came in that Birla Opus CEO Rakshit Hargave has decided to move on and seek an opportunity at Britannia after 18 months, just 18 months after the launch of Birla Opus itself. Of course, he led through Birla Opus at a very crucial time when, 6 factories were brought on stream. They had about 24% of the installed capacity of the industry and double-digit market share as well. But, the incumbents actually now believe that Birla is not a disruptor anymore, and perhaps it's become more of an incumbent. And that's the word that came in from Berger Paints as well, where they said that earlier from 0 to 450, 500 crores that they would do every quarter, that was the incremental market share that they were taking away from the industry. But now that they've stabilized between 900 to 1150 crores per quarter, the incremental revenue growth that will come in will not hurt the market as much. So they've become more of an incumbent rather than a disruptor. In the meanwhile, what had happened was there was a big decline in the share prices and underperformance of all the incumbent paint players as well, be it, Asian Paints, Berger Paints, or the others as well. So the valuations that these companies would be trading at were close to around 60, 65 times on a 5-year average basis, but all of them had come down to sub 50, in fact 48 for Asian Paints at one point as well. So brokerages are now saying that maybe the street is believing that the worst of competitive intensity is behind the sector. Why is that? Because one, Birla on its own accord has actually gone ahead and invested nearly 9,700 crores of the planned 10,000 crore capex as well. So they're not left with much more capex to actually deploy, in terms of a price war, etc. And then they have their own idea of, turning profitable, EBITDA profitable by end of year 3 of operations as well. So if they were to continue to do that, then maybe the price war will not be as intense going forward as well. Add to all of this, the last quarter was fairly weak when it comes to demand, but the second half, post GST cuts and, somewhat stable raw material prices, the demand environment looks a lot better as well. So demand environment is better, raw material prices are benign, we're also seeing valuations come off, and at the same time a disruptor is now turning an incumbent. All of that provided a perfect opportunity for brokers to go ahead and upgrade their view on the stock, and we had Nomura do that as well.
Thank you. And earlier today, we had a chat with Abhijit Roy, Managing Director, CEO at Berger Paints. Listen in.
Q2 of last year, since they had started just about that point of time, they had done about 450 odd crores as per their own analyst meeting, because it's not a published result, so we don't know. But it's around that figure. And this time they said that they have done about 110% odd growth. So we can assume that it's about 950, 960 crore, which is slightly below the first quarter of this year. And that's what they said, that they have done slightly below last year. Now, if you look at next quarter, and they have been doing around these figures, quarter 1 also was like that. Quarter 4 of last year was also similar. Quarter 2 of this year also is similar. So it's around that 900 to 1050 type of level at which they have settled out. The business will carry on as usual. That will happen, but the tapering is also happening. We compete in the market by giving some discount to the leader as well. So it's not something which is very disruptive as far as we are concerned. So from that perspective, I don't see that, really impacting. They have also indicated that in 3 years they will become profitable. If they have to do that, they cannot, discount, massively from here on.
Okay, all right. Well, that's Berger Paints. I just want to quickly highlight a bunch of other movers. Actually, one thing has got to be said. Even if market's down, actually Nifty's also moved down another 50 odd points. So we're down about 90 points, but market breadth is terrible today. I mean, some 3:1 in favor of declines. And it's lots and lots of 5, 7, 8, 9% cuts, which you don't usually see. Typically, even if market breadth is negative, the bulk of the volume is on the side of what is up, and it's a fairly robust list, but not today. Let's just actually address some of this, especially the ones which have reported numbers. Vinny is here with a compilation. Vinny, over to you.
Hi. So yes, in terms of the first stock that we're keeping an eye out on today, or has seen a sharp fall, that's Delivery. They reported a net loss this time of 50 crores versus a profit last year. Revenue saw a growth of 17% and margins remain largely flattest at 2.7%. The other one is Reddington. This is buzzing away in trade and flying high in trade today. Strong set of numbers that was reported by the company on a year-on-year basis. Improvement is what the company has seen even on a sequential basis. Margins remain stable at 2%. The software solution group as well as the mobility solution group, that's saw very strong growth of around 48% for the software solution group, and the mobility group saw around 18% growth. So that is why a strong set of numbers that came in from the company. Now, EPAC durables, that's the next one we're keeping an eye out on. The revenue saw a sharp cut of around 44% this time. The room AC segment, that saw a decline of 76% sequentially. And obviously, the main reason was unseasonal rains, delay between the GST cuts that came in. And obviously, that led to a loss for the company this time of 22 crores versus a loss last year of 8.5 crores. The last one we're keeping an eye out on is Paytm. Good set of numbers that came in from this company. Scaling with operational efficiencies. They spoke about AI, and that could be a new driver for the company. Revenues increased across segments sequentially. Contribution in terms of margins fairly remained stable at 59% versus 60% last quarter. EBITDA margins improved to 7% versus 4% sequentially. So good performance there from Paytm, and that's why this stock was buzzing.
Okay, all right. Thanks a lot for that, Vinny. Well, by the way, we have JK Lakshmi Cement's numbers that are flashing for you on the screen. And on a year-on-year basis, it looks good, but it's come on a very, very low base. And that's why those numbers actually look good. We'll have to wait by to hear the commentary from the management, because now as well, if you look at these numbers, the margins have commented on 13.5%. The previous 2 quarters, the margins are 18 to 19%. So on a sequential basis, actually, there's a sharp contraction in terms of the profitability. Though on year-on-year, it's looking good. It's on a low base, but the last quarter, the base here actually is a washout. So just keep that in mind for the time being. A spike up on the stock, but sustenance of this will be important because, on a low base, actually, these numbers look good. Mayuresh Joshi from William O'Neill joining us on the show. Hi, Mayuresh. Good to have you on the show. Mayuresh, what do you make of the cement numbers, and which is the stock you like out there?
Afternoon, Nigel. So I think on a comparative basis and on a peer-to-peer comparison, I think out of the large cap names, Ultratech is something that, as a clear disclaimer, we keep on holding in our global portfolios. But again, I think numbers were relatively better, and the kind of outlook that Ultratech probably has, both in terms of organic and inorganic growth, expected to add a significant amount of capacity over the next couple of years. Green energy is probably taking shape quite significantly, almost 32-33% in terms of captive energy consumption. Value-add products are also going higher. And therefore, I think the synergies that we'll build in with utilization levels expected to go higher with calibrated capex, I think that will probably play out in terms of absolute EBITDA and EBITDA per ton that they'll probably report over the next few quarters. So I think out of the leadership stocks that we like, Ultratech remains right there at the top spot. With the mid-caps names, JK Cement, which is obviously a mix of white and grey cement, is something where the earnings growth should continue to be a key driver going forward as well. The expectations, again, in terms of capacity additions that are probably expected to happen, input costs are relatively benign as we speak for the sector as a whole. And therefore, I think input costs along with logistic costs moderating should probably play out effectively for well-managed companies. And our take is that within the mid-cap space, JK probably is one. So I think a couple of stocks within this space that we continue remaining optimistic.
Okay. All right, Mayuresh, stay on. We'll have more questions for you in just a bit. Need to take a quick break right now. We'll be back with more in a moment.
Welcome back. Well, we are still in, we're still in conversation with Mayuresh Joshi. Hi, Mayuresh. Wanted to ask you about Hind Rectifiers. One of the numbers that just came out. Actually, year-on-year is looking very good. Margins as well are improving. Any view on the stock? It's been one of the big outperformers of the last 18, 24 months.
Nigel, I think, yes, I think the stock has outperformed quite significantly. And again, I think in terms of expectations of the product lines that they probably carry, the expectation largely is that it should benefit Hind Rectifiers going forward as well. In fact, in the recent past, they have just commenced the line in terms of the copper conductors that are probably required for the transformer industry as a whole at their plant. And therefore, I think as new additions keep on happening, across product segments, the expectation largely is that these value-added products will start contributing meaningfully in terms of margin stability, but also expansion of margins going forward. So I've not looked at the numbers in detail, but I think the numbers so far have been very, very encouraging. And the tailwinds to follow might actually ensure that the numbers continue remaining sustainable going forward.
Mayuresh, Redington, CCL, IGI, EPAC, Astral, any of these stocks you like?
Afternoon, Viman. I think CCL Products is one very interesting story. And the large part here has been that even if green coffee prices had been moving higher, which have moderated a tad bit, a large part of the expectation here getting built in is the expansion of capacities that they're probably doing both in Vietnam and India. The second aspect in terms of their global aspirations of taking market share quite significantly higher, expanding capacities and markets in the US and the UK. And at the same time, introduction of more value-added NFDC products, NFDC packs that will probably come through, which will ensure that the 15-16% margins that they've been reporting can actually break out on the upside if they're probably successful in creating that operating leverage from a volume and a value play as well. Having said that, I think the kind of net debt reduction that they're consistently trying to achieve every passing quarter, if they're able to successfully reduce this quite significantly over the next few quarters and other things play out, I think there will be strong earnings growth that will come through. So I think it's indicative of very strong rating rankings as we see at markets in India. So yeah, I think CCL Products is something that can do much that.
Okay, got that. So as we're coming to the final trades, it's still the same picture. Nothing much has changed. Grasim and Hindalco are, still the biggest casualties. Mayuresh, I mean, talking about what we've seen on Hindalco today, for instance, specifically, a lot of disappointment because of the heightened capex. Do you think this will linger on the stock for a bit, or could this be a buying opportunity? Because otherwise, I mean, anything and everything in metals was going up.
Afternoon, Sylvie. No, obviously, I think Hindalco has also been a strong outperformer within the entire pack itself. I think the incremental capex news obviously is something that is bothering the street on two counts. One, I think the additional capex is coming at a time when global conditions, both because of Trump tariffs and demand, which is not picking up quite significantly, is pulling down the LME prices. And therefore, when will LME prices probably start sustaining itself, and when will demand itself start coming back? Is something to be observed. The second aspect, obviously, is that they've got a lot of greenfield industries to probably look at, both from an aerospace perspective, the EV battery ecosystem, and the car ecosystem as well. And therefore, I think the end user industries for Novelis probably remains very, very strong. But to what extent does it actually come in play? On a standalone basis, obviously, I think Hindalco has done relatively better. Demand still expected to remain strong. The access to alumina smelters back home in India, I think, obviously gives them the added advantage in terms of absolute EBITDA outperformance compared to what the globe is probably doing. But I think all these factors might actually pull down the consolidated numbers. So yeah, I think wait and watch. And the stock has done well. It's not that the stock has not done well in the past.
Okay. All right, Mayuresh, thanks for that. We'll just quickly recap today's action before we move on. And it will be classified as a bit of a disappointing day because, like we've been mentioning, India's kind of been singled out because if you look at the rest of the Asian screens, once again, there was robustness across Japan, across markets like Hong Kong. All of them have ended positive, but we have ended on the negative side of the screen. And pretty much at the lows of the day, the Nifty now back towards the 25,500 mark. So where was the weakness? Well, the stocks that we were just discussing, both Grasim and Hindalco. Grasim, the exit of the top management at Birla Opus not going well with the street, 6.5% down. Hindalco, because of the additional capex, 5% down. The other losers of the day included names like Adani Enterprises, Power Grid, Eternal has lost quite a bit of ground. It's about a 2.5% cut for Eternal today, down about 4% this week. And then you have a lot of financial names which didn't quite perform today. There's Bajaj Finance, Jio Finance, ICICI Bank, quite a few of these names on the downside. However, the counterbalance from the other side was Reliance Industries, 1.5% higher, taking the, at least counterbalancing the negativity. There was also TCS that was chipping in to an extent, SBI with a 0.25% gain. And of course, the big stock of the day was Asian Paints, on hopes that the worst of this competitive intensity in the paint sector is now behind the company, so up 4.5%. But that's a large cap picture. Bigger issues, Reema, in the mid cap space.
Yeah, mid-cap index down 1%, small-cap index down 1.3%. Look at the advanced decline ratio. We had more than 2,200 stocks declining. Out of time, so running you through some of the big drags today. Utkarsh SFB 14%, Finiotex Chemicals 12%, lower EPAC Durables 10% down, Delivery, NetWeb, Greaves Cotton 8%, Aditya Birla Fashion, earnings reaction, Blue Star, Sterlite Tech. Look at Indian Hotel. All these stocks declined on very, very large volumes. On the way up, you had quite a few winners too, like a Redington, IGI, CCL, Astral, Late Revenues, Tech, a Paytm. But on the whole, the mid-cap performance was disappointing. The mid-cap index ending down close to about 1%. We'll take your leave in closing bell. Thank you very much for watching. Don't go anywhere. On the other side is Markets Forward.